What is going on, everybody? And in this video, we're providing the state of the market and stock picks for December 14th, 2022. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, core CPI expecting 7.3. We got 7.1, one of the biggest drops in inflation that we've seen in a very, very long time. Something we didn't think we would see for quite a while, but it's been a huge drop, which is, again, a very positive sentiment. Being said, and the market had a huge rip this morning only to start pulling back because tomorrow we do have monetary policy. We have Powell. We have monetary policy at 2 p.m. Eastern Standard Time. Then we have that immediately followed at 2:30 p.m. Eastern Standard Time, Powell. Now, Powell is going to essentially give his blanket statement, and then essentially he's going to field questions. So he is the ultimate primer for how the market is going to be dictated into 2023. So what's interesting here is something I've talked about even a while. It's been about a couple of weeks. When we were around that 3,600 mark, I said I saw some very interesting activity. It was right after Powell. Again, we essentially tanked about 100 points on the general index, and then it was just bought up, and the market has been ripping essentially from that point. It was also around the time we could have potentially reached peak inflation. Somebody realized we could have reached peak inflation and have bought in then. And so nonetheless, after our last core, I started really looking at shifting focus into the consumer. Right now, it is great that inflation is coming down. It is still very high, and something you have to keep in mind, it's still extremely high, but we are making great progress. And this is why I shifted focus over to the consumer and where the consumer is sitting at. And again, the consumer is heavily reliant on what the Fed are going to do. And this is why we sold off today, because it doesn't matter that inflation is come down a lot. It's still very high, and we still have the Fed looking essentially on our doorstep tomorrow. And where do they stand? 50-point basis move is what's been talked about. Some of the Fed futures are starting to say 25. I don't see 25 tomorrow because inflation is still too high. I think you'll see at least a 50-point basis move, and then we'll see what happens in January, and we'll see what happens in February as far as core before our next monetary policy, which I believe is in February, before we get another monetary policy after tomorrow. And so this is what is interesting, and we get earnings, something I've been talking about. If things fall in line tomorrow, primarily again with 50-point basis move in Powell, which I think is going to come in with a very blanket term like he always does. He's going to say that things are looking great, that we've got 2 months of essentially inflation coming down, which is great to see. But he's going to still have that blanket term that he's not going to take anything off the table because it can run away, and he has to be able to adjust. Again, the world is hanging on every word that he says, so he has to be very generic about the way he approaches his statements. So as this one man can move markets. So with that being said, tomorrow, again, very, very pivotal. Going to have a lot of weights, going to be a lot of volatility. I don't know if the market itself is going to move a lot. The market might actually gap down going in. Really just depends on how we do overnight. I wouldn't be surprised if we just stayed flat until 2 o'clock. And then we get that next monetary policy, and then realize that soon after next week is essentially Christmas week and the New Year's. So volume really dies out. There's not really much going on until the New Year. Then we get into essentially Christmas rally. And then we got earnings around the 15th of January. We start kicking off with banks again. And again, something to look out. Banks have already given you a lot of warning about stuff. You got FedEx next week. It's going to kind of tell us and how essentially this shipping department is doing and sales. They give you kind of some insight into sales. So that's again our next big thing. Next thing is not inflation. Now that's not so much a concern anymore. That's fine. That's great. But we got a bigger catalyst right now as the consumer, in how battered and beaten the consumer is right now, and can they come back? You need that demand to come back in. And right now, people are just buying basic necessities. And so, yes, things are coming down, but are they coming down at a fast enough rate in which the consumer can recover quickly? And this is why why we have the concern going into tomorrow. What will happen? What will happen with monetary policy? And again, I don't believe it's going to come in at 25. I believe it will hit 50. And then that kind of opens the door for a potential another 50 coming in February. Now the thing is he can still come in at 75, and I think that's what's concerning. Is if he comes in at 75, he's really going to break some stuff. And I'm talking about the consumer. I'm not talking about anything about inflation. At this point, nothing I've talked about to this point is to do with about inflation anymore. This is all about where is the consumer at? How much more are we going to break the consumer before the Fed pivot? And what I mean by pivot is that they stop increasing rates. We won't see that for a couple more months, in my opinion, unless, again, inflation drops dramatically down to the fours. The Fed have talked about being down to the fours. We still got a long way before fours. So the market might be selling just because it may feel that we got 3% more before we even get back into the fours, and know that we're going to have high inflation for a little while, a little bit higher than normal than that 2% that we've typically have or typically aim for, just because of again the printing of money and where it's put us right now. So very interesting spot right now. Again, the market tries to be more forward thinking in an extent, and is very emotional. This is why I say you need to let the market digest what's going on, because it will seem very irrational in the moves that it makes. Yes, it was great to see inflation come way down. The market jumps and then it sold right back off because you have a bigger power at hand coming in the door tomorrow that can change everything, and then shift focus, have the market shift more focus on the, again, consumer, and seeing this demand destruction that we're seeing all the time with these high rates, as again, people can't get qualified for homes or anything else. That you're essentially soaking up that pool from people having to buy. So you're destroying the demand that's there, and causing people to look elsewhere. And this is why cities, when you're talking about mortgage loans and everything else, this is why you get a very different flavor to every city you go when it comes to essentially real estate, and why it's shifted, and why I've talked about that, because it's, people are moving out of big cities, California and everything, and moving to smaller cities. And so you're seeing more demand in perhaps Arizona than you did in California. And then, again, people getting laid off left and right, and the continued layoffs. I remember this happened a couple months ago. Banks laid off a lot of people, and then it wasn't shortly after, then you started getting the wave of Microsoft and Amazon and Tesla laying off people. That wave is not going to stop if the Fed continue to hammer rates, which I do believe they're going to do, because, again, inflation is still high at 7%. So with that being said, I'm going to stop essentially beating that dead horse, and we'll move on a little bit more to technicals tomorrow. Again, some of the things I'm really looking at, it's great to see this breakout, but you can't trust a breakout in this market. Again, this is really dictated on what's going to happen tomorrow. 4,100 is still a very solid wall. If we could break that, that'd be great. To be able to break that, you're going to need Powell to kind of fall in line with everything that we've been talking about. Even still, monetary policy is really going to dictate that. It's really going to dictate 2023. Again, for us to make new lows, I think, again, you're going to need a bigger catalyst for us to do that. So, but tomorrow, Again, all depends on where we land, but I think we're going to essentially float between the 4100 and essentially the 4K mark around there, just until we figure out what's going on with monetary policy and Powell, and then take it from there. And then we'll have the remainder of the week. I think we'll continue whatever trend that we find ourselves Thursday morning, and then realize that next week we probably won't have a lot of, again, volume, getting really holiday mode at this point. So you're really kind of pushing it. But then again, institutions may be trying to take advantage of that last week in the year, last 2 weeks in the year, to try to make some sort of profit on top of everything, which we've been kind of seeing in Thanksgiving week, which typically we don't. There's not a lot of volume, so it's easy for them to kind of push their weight around. But nonetheless, we'll have to see there. Again, going to dictate a lot on what happens tomorrow. Bitcoin, a nice little pop today. Again, this 1700, 1800, 18K, excuse me, it's essentially been a wall right now. Again, the FTX drama is starting to unfold. What's concerning about that is the people that are getting affected or have essentially soaked money into FTX, and that's what we're finding out, and what could potentially lead to a big drop. So you do have to be mindful of that's kind of out there too. Not so much that people are actually surprised it's popped. I'm not really surprised. The whole market in general's popped, and Bitcoin's been moving with the market. So I think that's going to continue, and going to feel Bitcoin even more in the future once we actually do start getting into a bull run again here shortly. I shouldn't say shortly, but I should say here on the back half of next year. I think we still got to get through the next couple of months and actually hit a pivot with the Fed before that does happen. The dollar, again, great to see, holding 105, broke back down. Again, you got to really watch out for the 102. You're getting closer to a very big support here at the 102. You're going to hit that 102. You're going to get a big pop out of there. So the question is does it continue up, or does it continue selling off after that pop? So just be mindful of that. And then we'll take it from there. Tesla, I think on this one, it was funny because everything was popping, but Tesla kept selling, which is really interesting. I think Elon is selling more, and I have a thesis into this, is that Elon is selling a lot because on the next earnings is when he's going to essentially announce his successor. At least that's my thesis. There's been a lot of information about him lately. So, and then with the continued selling, hasn't said he's done selling. I think that's he's going to liquidate his whole potential position, or a vast majority of it before his next move, before he exits Tesla, and then that way can use full time for SpaceX and for Twitter. So we'll have to see what happens there. Still a very great company, but if that does happen, I do see Tesla selling off by losing Tesla just in general. Not that Tesla can't hold itself at the end, but then again, you never know. Tesla could actually start running as well on the same token, because now you got a full-time employee as a full-time CEO as opposed to a part-time CEO right now. So Tesla does definitely need to start coming back and reclaiming the 168 though, and start pushing up. But we'll have to see how that plays out. Apple, a safe haven break here. Let's see if this can actually break out. Again, every time you get a break, hopefully this can get back over the 146, 147. If we can break back over that, that'd be great, and potentially start making its way back up. So watching that closely moving forward. Airbnb is another big one. I want to keep this on watch. I really like it around the 90 mark. But again, it's really going to dictate what happens tomorrow. So Thursday or tomorrow night, when I do my weekly update or daily update, I should have more insight into potentially better positions moving forward going into the new year. But again, we have to be still very cautious. Again, great first steps, but you still have to be extremely cautious because there's a bigger catalyst that's brewing that can take the market lower. So BA, again, nice breakout retest. This looks like it can continue forward. Again, very overextended. Right now, you're in that hopium phase that people are getting out of potential depression right now. And so right now, any kind of hope is again very potent in this market, and rightfully so. People are just tired of the bear market news. So again, tomorrow you want to watch again this 129 mark for JPM. You don't want this to break down below. Again, overextended. It could drop pretty heavily. And you're looking for it to kind of break out the 139 for the bulls to come back. Again, you want the banks running on your side. GS, same thing. Even though this thing is corrected a little bit, needs more of a pullback. It's still quite extended here, but again, that all depends on what comes out of Powell's mouth tomorrow. BAC, same thing, is getting ready to pull back from that point. So again, I don't want to make this video too long. Again, whatever I say isn't really it's going to change a lot tomorrow, just depending on what comes out at 2 p.m. Again, you're going to get that report that's going to have the rates on it. Then 2:30, you're going to have Powell fielding questions. You're going to kind of get an idea where they stand, where they're looking at actually pivoting. Again, an actual pivot is when they stop rate increases, which again, I don't think that's going to start anytime soon, at least not until they at least get down to 4 or very close to 4. Will they stop doing that? So we still got quite a ways to go to be able to do that. And again, I want to be surprised if they finish the year with a 75-point basis move. If that happens, I think you're going to throw the market off. And I think that's what the market is afraid as well, is that a 75-point basis move would throw off expectations, and then which in turn could cause the market to panic, just because now they know for sure that the Fed is going to essentially break everything. So again, another 75 would probably really help the market in general as far as inflation is concerned with their rigid tool that they use, but it's going to hurt the consumer even more, and what that leads to is what we need to be concerned about. So with all that being said, I appreciate you. Go ahead and drop a like, and until next time, I'll see you guys later.